Hello everyone, welcome to ElliottWave.com YouTube channel. This is Henry, and today's Friday, February the 4th, and the time is around 3 a.m. GMT. Today we're going to be updating the chart of Apple. Okay, short-term view, 60 minutes chart. We're going to discuss also a little bit about sort of the overall idea about Apple and possibilities, options, alternates, and all those things, right? Okay, so for first, let's talk about the 60 minutes chart. Now we can see from the chart we ended with 4 here. This is a cycle degree right here, and that means we are currently within wave 5 in the cycle degree, and within wave 5, as you know, it will subdivide into 5 waves, and you can see that we're going to be ending a 5 waves up. 1, 2 in the minor degree here. 1, 2, 3, 4. Now looking to finish with 5, to finish with 1 in the intermediate degree, right? So this is only one of 5, right? So where we are is with 1 of 5, right? So I mean, if you want, you can color it so that it matches. So we are now within with 1. Okay, and of 1 of 5. Okay, so this is where we are, and looking for another boost higher to finish the 5 waves, and then from there we can get this pullback to correct this entire rally, and then higher again afterwards. Okay, so now let's talk about a couple of things, alternates and all those things, right? Okay, so what will be another possible alternate here? Well, there's a couple of alternates, but I would say at this point we got a couple of alternates here. Um, One possible alternate, for example, is the idea that we are only ending 3 in black here, and this is your 4 in black. So that means we're going to be ending 5 of 3, followed by 4 and a 5 before we do, before we finish this big one in the intermediate degree like this, and do a with 2 in blue and rally again. But that doesn't really change the idea. Okay, with this alternate here, it doesn't change the idea that that it still remains, we still like more upside as long as it doesn't get anywhere close to the 154 right here, right? So that's only a small adjustment if that's going to be happening. So that's one possible alternate. Now another possible alternate, we need to think about the bearish idea, right? The bearish sort of alternate. Now let me reload this. All right, so what will be the bearish alternate? Now in order to understand the bearish alternate, we need to look at the larger time frame. So if I look at the daily, so let me just copy this 4 right here into this. This is your 4, and then there's also a C right here. This is your C. So based on this alone, I can conclude, so if this is a C and this is a 4, then this must be an A, this must be a B, and this must be a 3, even though I don't see it in the 1-hour chart, then but I can sort of conclude that will have to be the case. Now let's take a look at a couple of things here. When we look at the daily, what can we observe? Well, what we can observe so far is the following. First of all, this view, it can get fairly, I mean, you can see in the arrow is only turning up in the black instead of green. And that what that means is in the shorter cycle, in the 60 minutes, we still do not have a confirmed bullish sequence, right? In order for this to become green or to become bullish in the short term, it technically has to break above this previous peak here first. So once it breaks above here, that will confirm this low here is really in the low of the correction. Okay, we're going to extend higher. Now until we break above here, one possible options will be that this is your W. So we got ABC, and that will NW, and this is your X, and then we can go down in another 3 ways like this, a Y leg. So it's a 3 X, 3 Y, and then we go up from there. So that's another possibility. So with this alternate here, so remember this view is only getting validation only if we can break above here, but we are calling the more aggressive view because the trend has been bullish, so there's no reason to kind of calling for a double. This is what we call double correction, which is a double zigzag, because the reason is against the trend. So when it is against the trend, you're calling a double. Probability wise, usually it will be smaller probability to happen. That is the reason. So in this alternate scenario here, remember we need to break above here to confirm, to validate that this is truly the end of the correction. This is truly wave 4. Now, in the alternate scenario, if this is going to happen, then in fact, if we go back to the 1 hour chart, this could be, for example, instead of 1, 2, 3, this could be an ABC. This could be ABC. Remember, ABC in 1, 2, 3 is the same structure, 5, 3, 5, right? So this could be ABC, this could be W, this could be X, and we can go down, right? So that's one possible alternate. Another possible alternate with the same double correction kind of idea is that we just simply make another push higher. So this, let's imagine this is AB, 1, 2. I place here 3 and 4, and this is a 5, and that will be in the end of the C leg, you know. So let's call it this way, AB, and this is your C right here, something like this, right? So that will be another possible alternate in which you got one more push to finish the C and then drop. That will end the X, and then you drop like this. So you have just one more push ending X, and then you drop in another 3 ways like this. So that's another possibility. So bottom line is, this view is only getting validation if we break above that previous peak, right? Until then, we can always do double correction. We cannot completely rule out a double correction, but we don't call it because it is against the trend. So it will be better to call the count with the trend. Now, having said that, another observation that I can see here is that from this all-time high, all I can see, if you look at the daily, is very clear. What I can see here is a clear 3 waves. This is a clear 3 waves no matter what. You know, this is a clear 3 waves. Now, as long as you can agree with me this is a 3 waves, then this remains bullish. Because, I mean, if we form a major top, if in any way or form, this would have been a 5 waves down. But we did not have a 5 waves down. We have a clear 3 waves in my eyes. It's a clear 3 waves. As long as there's only 3 waves, most likely than not, this remains a bullish market. Now I know I'm talking specifically about Apple. Some other high-tech stocks like like Facebook, for example, has dropped tremendously. It's all over the news, like 20% drop and so on. But at least with regards to Apple, right? At least with regards to Apple, I only see there is pullback so far. So that means it is still at this point favoring the bullish market. Now that doesn't mean we cannot do double. We could be doing double for sure. Could be doing double. However, even in a double case scenario, it doesn't change the fact this is a 3 waves. So as long as you see a 3 waves, still it is a bullish market, right? Still it is a bullish market. Until we see a clear 5 waves down, it still remains a bullish market. Okay, so that's the idea. So shorter cycle, this is what we are calling for a 5 ways up to finish soon, and then from there we can get 3 ways pullback, followed by further upside again afterwards. So I hope this is clear. And as always, if you do want to get more updates on Apple or any other stocks, indices, ETF, commodities, Forex, cryptos as well, we do have 14 days trial, and the link is provided in the description of the video. So I'll see you all again next week, and have a nice weekend, everyone.